what's happening in the insurance space because something very interesting is afoot. Premiums and policies are rising. So let's try and understand the impact for you, the consumer, as well as what it means for companies like ICICI Lombard. We have with us Sanjay Datta, Chief Underwriting, Claims, Reinsurance and Actuarial at ICICI Lombard General Insurance, joining in on the show right now. Sanjay, hi, good morning. Great to have you on the show. Got a little delayed, I guess, because of technical troubles. But Sanjay, as inflation continues to be the top concern for insurers, according to Global Insurance, the premium growth will return back to 2.1% in the fiscal. Help us understand what's your view on the same. What is the overall trend that you see on pricing across products? And do you think we're in an upward trajectory now?
Yes, no, to that extent, there are certain products where pricing, will undergo some changes. I mean, those are worldwide trends. There have been products which, deal with flood, earthquake, and various other natural catastrophes. There is some rate hardening happening across the space because of reinsurance rates, hardening a bit across the globe. But apart from that, in India, motor and health, which are mostly availed by the retail customer, there is some hardening on a little bit of hardening on the health side because of COVID. After post-COVID, there's some price increases which are happening, but the motor premiums continue to be competitive, especially on the vehicle damage portion. The third-party premiums, of course, are given out, rate increases are given after some time, and that too due to after regulatory process. So that also has been, quite stable for some time now.
Mr. Datta, morning. Now, going forward, insurance reforms may see PE funding surge in the sector as the IRDAI has raised the cap limit and allowed PEs to be promoters. Is this going to be a key catalyst for sector growth? Help us understand what the lateral impact is going to be.
Yes, this is, of course, a big change in terms of the manner in which capital comes in. And obviously, insurance penetration requires, capital, because, the more we transfer risk to insurance companies, we need more capital to cover those risks. And forms of capital, which includes PE now, having broad-based it, is a welcome step. Now, we are able to avail, capital from all, responsible, sectors. And that's something which the insurance sector, looks forward to. There's been a spate of changes in regulatory, architecture. And, one of the key things is allowing more companies to come in, allowing, a lot of us to avail more capital so that we can penetrate more. That's the overall arching goal, which I think regulator has placed in front of all of us.
Good morning, sir. If we could also talk a little bit more specifically about, the draft guidelines, which are looking to cap commissions for both life as well as non-life. Some say this, this is going to be fantastic for tech aggregators, the like of Policy Bazaar. What can this really mean for insurance sector at large, where the penetration is still quite low?
Yes, one of the key, the whole underlying, philosophy behind, making the expenses of management across all products is to give room and leeway to insurance companies to be able to see which products require more effort in distribution. The ones which do not require more effort, you can pare down distribution costs there and play it across all products. So this is a key reform, allowing the insurance companies to be able to see where we would need more distribution costs, especially the innovative and the areas of products where we require more awareness creation, more distribution channels to be created. Of course, various forms of channels will require remuneration, and that's something which each distribution channel will look forward to in terms of where it plays out in terms of products. But all in all, it's a key reform, and this is something the insurance sector had been looking forward to. Hopefully, once it gets implemented, it'll give us a lot of leeway, room to maneuver to be able to manage expenses in a manner that it increases penetration, and also kind of helps us to, bring down, commissions over the long run, so that the products become much more customer centric.
So Datta, will you allow me to ask this one question? If the regulator is doing all it can to help the insurance companies and reduce expenses, then why is it that we, the public, at the same time are also hearing of insurance companies' plans to hike premiums for whether it's motor insurance, whether it is health insurance, and at a time when there is already a pressure on the wallet and the penetration is low?
There are two parts of the two sides of the coin. You have to sell products which are viable and sustainable. A lot of the product costs don't only come from distribution. That's getting rationalized. A lot of it comes from the fact that there are underlying drivers of cost. Let's take claims costs, especially the healthcare sector. We've seen inflation hovering around double digit for some time now. Post COVID, it's also increased a lot. There's a lot of structural shifts in the way people are accessing healthcare and all of that. All this leads to cost increases. And once you have these cost increases, you have to make sure that the products which we price takes care of these costs. And that's one of the key ingredients of increases. There are certain areas where we do get efficiencies of scale. And as we get more penetration, especially our operating costs, as we use digitalization much more, we'll be able to be much more competitive on being able to bring down cost of operations. That's one key areas of focus, for all insurance companies, including the regulator. Digitalization will help to bring down costs. So both the kinds of, forces are at work. At times there are increases. At times we are able to maintain prices for a very long time. So in health, during the COVID period, a lot of companies maintained prices. And so that was one big key, I think. Even on motor and other places, prices were stable for a long time, especially on the third party. And so, at times, you will have these increases, but this is wholly in order to make the product sustainable so that we are able to offer product in scale and to a large number of, consumers, and so that they are able to avail the benefit when some catastrophe or some serious event like a pandemic occurs or a flood and earthquake occurs. That's the whole purpose of penetration.
Sanjay, great to have you on the show, and we'll catch up again soon. This was a rather truncated conversation.
Thank you very much. It was a pleasure, being on this panel.
Okay, great. That's the word coming in from ICICI Lombard.